Today, we are going to talk about the number one indicator, in my opinion. And it's kind of like the biggest cheat sheet ever. Highly requested. But before we do that, YouTube people, make sure you like and subscribe. I have a lot of, I got a lot of feedback, but I didn't get a lot of comments. So guys, please do me a favor. On the YouTube video when we post it, do me a favor and comment your feedback, what you actually think was good from the stream, what you think was bad from the stream. This is the second one here. We're only going to get better, and I'm going to give you guys as much knowledge as I have to share for you. So without further ado, let's talk vector candles, aka the greatest indicator of all time. So before we start, you need to make sure you have this indicator. If you don't know, you click indicators on the top of your trading view. I recommend you follow along with me. But go to your indicators and type this one here, which is called Traders Reality Main. Shouts out Tino from Traders Reality. This is the indicator that you guys want, and it's gonna look like this. Okay, it's gonna look quite funky at first, especially if you're new to it. It can be a little overwhelming. Yours might look a little. Sorry.
I was gonna say, or it's overwhelming on mobile too, by the way.
Oh yeah, 100%.
If you're not on PC.
Absolutely. It's super overwhelming. But that's the indicator that you want. Somebody just joined, so I'm going to show it again. Guys, download this, or not download, but get on this indicator, Traders Reality Main. This is the indicator that we're using today. And again, we're talking vector candles, okay? So it is overwhelming, fair warning. Yours is probably going to be even worse than mine. I cleaned up mine a little bit. If after the stream you guys want my settings, which I tweaked a little bit, I am more than happy to share. And for the YouTube people, get on over to the Discord. The Discord link is in the description. Come on over. We have a pretty active community where we're chatting all day about trading and other stuff. Other stuff that I shouldn't mention here, but come check it out. Yeah, let's get started, okay? So today, we're doing vector candles. What are vector candles, first of all? So on this indicator, vector candles are, I'm actually going to remove the EMAs real quick so that we can get rid of all the distractions. Let's dump that. Okay, so if you can see, I don't have normal colored candles. I got the white and gray for what are normal candles. And then we have green vector candles, red vector candles, purple here or pink, and then we have blue vector candles, okay? Now, I'm going to explain what a vector candle is and the significance of it and why they're why we need to pay attention to them and why it's a cheat sheet. So for the ones on YouTube, you definitely want to stick till the end, okay? So let's talk vectors. First of all, what is a vector candle? So a vector candle is a candle that has more than average of tick volume. Well, what is tick volume? Tick volume is the number of transactions within a given candle. So we're on the 4-hour here, and we're going to use these candles as our example, okay? So obviously the first thing you can see, let me move this box. The first thing you can see is that our vector candles are colored, aside from some of them, but our vector candles usually are the larger candles, okay? And it's not volume in your traditional sense where you're looking down here, where, for example, 10 million Bitcoin was traded in this candle. It's the tick volume is the number of transactions within this candle. In other words, the number of times the asset pair changed hands. So if this is $10 million worth of Bitcoin was traded in this candle, but like it was across 50,000 transactions, right? Longs or shorts, whatever it may be, then that's what tick volume is. This is very important to understand. Does anyone have any questions about what tick volume is before we continue? And same as last time, guys, I'm going to ask a question like that. I'll wait about 10 seconds or so. If I don't hear anything, I'll continue. Otherwise, go ahead and...
Sorry. Yeah, I've got a question. So it's when there's more transactions compared to what? The last candle or the average number over the hour or the time frame?
Yeah, that's a good question. It's compared over, I don't know the exact number of candles, but it's either like 5, 10, or 15 candles prior.
I think it's up to 10.
Yeah, something like that. I'll let you guys know in the Discord after the stream. I actually don't know the exact number. But just know that it's like relative to like a few candles prior. Okay, and that's a good question. We're gonna talk about what that means and the significance behind it later in the stream. Anybody have any other questions? Okay, I will take your
All right.
phone.
Sorry. All right. I think I will have. Okay. Let's take it simple. Let's say we had 10 transactions on each candle before the red candle appears. Yeah.
Yeah.
So what the red candles gonna means if we had them 10 candles? Let's say it works up to 10 candles
Yep.
back.
Yep. Yeah, good question.
So,
I'm gonna get there now. So let's define the difference of colors and what they mean. Okay, so using Black Point's example, if a normal candle, so let's say this candle here, right? Normal candle is 10 transactions on average. A green vector and a red vector is 200% or more tick volume than what's considered average. So in our case, if an average candle is 10 transactions, green is 20 plus, red is 20 plus. The blue is 150%. So it's 15 plus, and the pinks are 15 plus. Okay. So again, this is very important. You guys need to know this. So gray and darker gray are just normal candles. 10, 10, 10, sure. Green, we have 20 plus. Purple, we have like 15 plus or 150%. And the purple and red are the same. They're just red candles, but it's just different based on the tick volume. But there's no other, like, it's just a down color. Like if this candle here wicked down and then came up, it would be a green vector candle instead of a red one. The red is just depending on where the market is moving. Okay. So once again, real quick, just to reiterate, normal candles are 100%, green is 200%, red is 200%, purple and blue are 150% of tick volume, which is the number of transactions that happen in that candle. Okay. Now, why is that important? And why is that a cheat sheet? Why is it a hack? And why do we look out for it? Well, the answer is simple, and it's my favorite term in all of trading, which is the market makers. Okay. So if you guys don't know by now, the market is designed to wreck you, which you should know because you should have gotten wrecked at least once in your life, because everybody does, and that's how you learn. Okay. So it's designed to wreck you. And who's the one that's wrecking you? Well, it's the market makers. The market makers are the pool of liquidity. They're the hedge funds and the whales, so call it, and all the big guys on Wall Street, etc. Okay. They're the smart money. We are the dumb retail money. Okay. The relevance of the candles and why they're important is because when you see a vector candle, you know that market makers are present. And the reason we know that is because, going back to our definition of vector candles, if tick volume is double the amount of a normal transaction, the only one that is able to open and close that many transactions are the market makers. Okay? So they have larger orders, or like, whales, whatever, and they're able to fill double or 150% of a regular candle within one candlestick, which is what makes the price move. Okay? Am I good so far? Everybody with me? Okay, seems like we're all good. Cool. Okay, now I'm going to explain what's going on in this vector candle because it's very important for you to know this, as this is what's going to result us. Like, this is what's going to define why we come back to the vector candles, which you can see here. Like, we have a red vector, right? Green vector. This candle was completely recovered. For those who may not know, when I say recovered, I mean the price comes back and, like, is beside that candle at any given moment. Okay. So this indicator also gives you, I don't know if you guys can see it. I have it very faint because I like dark, but you can see these like lines. Again, I don't know how well you can see it. And same with the YouTube guys. I don't know how well you can see it, but you can edit this and make it brighter. This. I think. No, not this. Okay, whatever. We'll do that later. Ooh, we are dumping right now. Okay. Anyways, so it shows you basically which vectors have not been recovered. This is actually a very good example right here. So literally a few minutes ago, we were up here and you could see to the left, we have a green vector candle that was not fully recovered. Now it was fully recovered. You see how price came down to where that candle closed? I would not be at all surprised if we continue bouncing from here. And like you can see, it's pretty accurate, right? Like this is where the vector closed, which was at this price, 27883, and it wicked down to 27859. So we're off by like $20, right? So it's pretty accurate. And I'm going to show you why it's important for you to know these levels now, okay? This is the part that might be a little bit complicated. I'm going to take some time here, and I'm going to make sure you guys all understand it because, like I said, it's very important. So this is what's going on in this red vector candle. I'm going to explain it here because it's a good example, okay? So if we see vectors, we know that market makers are present, and we know that they're the only ones that can fulfill that many orders, okay? So if market makers are present, something you guys need to understand as well, like when you're trading on your exchange, okay? Let's just say it's Bybit, even though Bybit sucks and we all have to move now. But let's just say it's Bybit. Bybit is not the one that's opening the position against you. You guys need to think like, who pays you when you win, right? Who are you versing? It's not, if I long $100 and someone in this Discord shorts $100 at the same time, it's not me versus you. It's not my liquidity up against your liquidity and they're just matching us together. That's not how it works. It's my liquidity up against the market makers and yours up against the market makers. They are the ones that provide the liquidity to the exchanges, okay? Now, this is what's going on in this candle. When we have a green vector candle, if we know that market makers are present and they're the ones that supply the liquidity, well, you can only, and their position goes against yours. Shredder, do you mind muting your mic, please? Their position goes against yours. So if you are longing here, right? You see, like it's human nature to I jumped down to the 1 hour, right? It's human nature to, when you see, oh, price is rising, I'm going to go long, right? That's the FOMO long. Everybody knows the term FOMO in trading. When you go long, the market maker is supplying your liquidity, which means he's going short, okay? By the way, when I say he, it's not one person, but we're just using that as like the analogy for all of the market makers. So when you're longing here and longing, oh, price is rising, market maker is shorting and shorting and shorting, okay? Against your position. You long $100 there, you go up, let's just say you're up $50 or whatever. Cool. You keep longing, or retail keeps longing. Market maker is shorting. So as price is rising, this is the most important part. You guys need to know this, okay? As price is rising, market makers, the smart money is shorting, okay? Shorting. So in theory, let me actually mute my stream because I got that feedback to do that. Mute channel. Or mute server. There we go. Okay. Somebody can, hold on. Okay, so, yeah, when price is rising, market maker is shorting the whole way down, okay? So you would say like, you know, Geo, well, why would the market maker send the price higher if he's shorting, right? Well, I'll tell you why. Like the market makers, which is the smart money, they don't short from the bottom, okay? They short from the top and they realize a return. You guys got to understand that this is a game, and the market maker's job is to keep your interest in playing the game, right? If they wanted to, they could rip price up and down like until you're blue in the face, which some days they do. You know, we had this crazy day last week. Some days it's like kind of irrational. They can do it, but they don't, because no one will play the game, right? If market makers do this all day long, Like no one's gonna play, right? They need to give confidence to retail, to the dumb money, to us, to play the game. So this is why they spike the price, okay? They know that retail is gonna FOMO long, FOMO long, FOMO long, FOMO long. They know this. And the part where retail loses, because I'm sure a lot of people here know as well. Like at least in my experience, making money is not hard. It's keeping the money that's hard, right? So retail will long, whatever, be in profit when they're up here, right? Market maker spikes price one more time. We're going to go into smaller time frames later, but spikes price, traps everybody that's longing the top, because keep in mind, retail's irrational. They just long no matter what, right? And while market maker is shorting. So they long, they get the price to go as high as they possibly can. And keep in mind, market maker is shorting this whole way up. They get price to go as high as they can so that they can continue shorting the top, trap the retail traders long. That long up here, they trap them by ripping it down, okay? The ones that were in profit over here, just as human nature are, and I'm sure everyone in this group at one point can relate, we're greedy and we don't pay ourselves, okay? So how many times have you been in a position where you were right and you made a nice money and then this happened? And then you get either stopped out or you get scared and you close your position like in negative so you don't keep losing. This is basically the way that the market moves. This is the game, okay? And it's important to understand the game because retail does not see these vector candles. Retail sees huge pumps. Oh my God, Bitcoin's going to a million K. You know, like that's just how they are. Oh, it's a bull market. It's a bull market. Whatever. The reason that market makers come back to their vectors are because that's where their liquidity is. If they've been shorting, well, eventually they need to realize a return on this because this whole way up, they're in the negative. The difference between you and the market maker is the market maker can be negative for virtually like an infinite amount of time. You cannot, right? So they need to realize the return. That's why when you see green vector candles, market makers are selling. They are not buying. People say, "Oh, the bulls are in control." Well, if you can only buy if somebody sells. So if price is rising, the ones that are in control are the sellers, not the buyers. When price is rising, the sellers are in control because they're choosing to sell. You can't buy if nobody sells, right? When price is falling, the buyers are in control because you can't buy or you can't sell unless somebody buys. And that is essentially what liquidation is. Liquidation is a forced sale because you run out of margin. You're in trouble, right? That's why a lot of the times it might seem like, oh man, what happened? Like market maker hit my stop loss like almost to the T and then bounced from it. Well, they know where your liquidations are because that's where their money is. If there was no such thing as liquidation, then you would just hold your position forever, and then market maker would never realize a return because you would never close the trade. But the liquidations forces you to close the trade. That's why they come back to the vectors because they need to realize a return on it. So now I'm happy with this example. It's a really good example. So here we know market maker shorting, right? Now market maker rips price down. But we also see a red vector candle. And I called this out in our Discord and in Jason's Discord. I even said, guys, if you missed the move, don't worry. And I can even go back. But I was like, don't worry if you missed the move. We're printing another vector. Okay? This is what's going on now in this candle. So if market maker is short at the highest, like net short, he's probably like net short over here, whatever. At the highest point, he's like going heavy on shorts, trapping retail to go long, etc. Okay. Now what happens as price is dropping? Market maker is closing his short positions, right? Stay with me here, okay? Let me, remove these lines. So at the top here, market maker is net negative, right? He continues shorting and starts ripping the price down. So as price is falling now, market maker is closing his shorts because he's realizing a profit on all of these shorts that he took. So now he's closing his shorts while simultaneously opening new longs. Remember, when price is dropping, the market maker is buying, especially if there's a vector candle, because you can only sell if somebody buys. So when people are like, "Oh, the bears just wrecked us," nah, man, the bears are not in control here. The bull, like, I don't want to say the bulls. I don't even believe in bullish and bearish. Like, there's mark up and mark down. Bullish and bearish like puts emotion into the charts, which we don't want to do. When price is marking down, the buyers are in control because you can't sell unless somebody buys. Anyway, so that's what's going on here. And if you can see, and I called this out. So now if market maker's closing his closing his shorts that he did on the way up, now he's closing them and opening longs, right? As price is dropping and he's opening longs, market maker, once again, he's in drawdown. So here he's in the negative. Well, market maker needs to make money. If the market maker's not making money, then there's no market for us to play in. So what does he do? He shifts price back up to his vector like zone so that he can wreck all of the people that FOMO'd short here and did not pay themselves and wreck them here. And while realizing a return on his longs. Okay, so that's what's going on in the candles. I know that was a lot of information. You're probably going to have to go back to the YouTube video and watch that a couple times. But for now, I'm going to give you guys the floor for about a minute or so. Let me know if you have any questions. I know that was a lot, and I need to drink water also. So go for it.
It's not a question, but I think it's the good example when you can imagine you have a casino with a low liquidity. So I mean there is low prices, a low price for win, and then the casino makers decide to give a big bounty, like 10 millions on roulette, and then everybody are more likely to go into play.
Yeah, I guess it's kind of like, I wouldn't say casino, but maybe the lottery. Like, they give a big jackpot, but the people that play are the ones that fund the jackpot. So maybe
Yeah,
that's what
indeed.
it is, something like that.
Yeah, something like this. Yeah.
So probably going to do this anyway, right? Because it's the natural progression of the sort of tutorial. When you look at that example there, the green vectors up and then red down, how do you trade that?
Okay.
What's going through your mind as them green candles are forming? Imagine you can't see the grey at the top and then the red. What are you thinking as it's going green up, green up? You're thinking, there's going to be a dump.
Okay, good question. So, actually, very good question. So, okay, so this is the 1 hour, right? I'm gonna jump to the 1 minute real quick and show you that there are vectors here as well. Okay, so there are vectors on all time frames. If you go on the daily, there are vectors, whatever. Okay. By the way, can you guys see these different like shades? I know it might be very faint, but it'll help me.
Yeah.
You can see those? Okay.
Yeah.
Okay, cool. All right. So this is what I'm thinking, okay? As soon as I see vectors, I know that market makers are present. I know that market makers are shorting. Now, this happens on all time frames, okay? All time frames. This is what I'm thinking. At this point, when we're I don't know if you were here in our last stream. If you weren't, go back and watch the YouTube videos. And same with the new people on YouTube. Go watch the previous video about Market Cipher B, the best indicator that is not on the charts over here. And these are the only two indicators I use. But go back and watch it. But now I'll explain. So as price is rising, right, and we're getting green vectors, and we're on the hour, and on Market Cipher B, you can clearly see like we can fall here. Like this is pretty high. At this point, I would jump down to the lower time frames, look for divergences, see what's going on, whatever the case is. But we're pretty high here, okay? So when we come up here, green, and we hit this purple stopping volume candle, which I will explain in a couple minutes here. We hang around here for a couple hours. I'm anticipating at some point, like, guys, nothing is for sure, but I'm anticipating like there's a possibility for them to just rip this whole range down and grab the liquidity. Okay, so when you're trading, you need to even if it doesn't play out, you need to know that it could play out. You need to be aware of it. People all the time, and even in Jason's Discord, this day messed up a lot of people. Man, I longed from up here. I shorted from, or sorry, I longed from down here. I shorted from somewhere down here, and then I longed from like somewhere over here. Okay. And this is why I always say follow the money. Okay. People are drawing weird geometry shapes, nerdy shapes. Oh, my triangle, my hexagon, my equilibrium, whatever. Like, it doesn't make sense, man. Follow the money. If this is I don't even know what it is, like the flag thing that people draw, it's a bullish flag, whatever. Like, if there's all this liquidity here and there is not much liquidity up here, why would the market maker continue bringing price up? Like, it doesn't make sense. They need to realize a return on the money that they've been shorting this whole way. Okay, so this is how I approach it. If we don't see this, I see that the hourly is topped out. I'll go on the lower term time frames, and I know that there's a vector here. Okay, or sorry, like vectors here this whole way up. I will look on the lower time frames. If there are bear divs, whatever, I will short, because I know that it's likely that they come down. And the thing about vectors are, the lower the time frame, the quicker they recover them. So this took, 7 hours for them to rip it back down. It doesn't mean that every 1 hour candle will take 7 hours. It doesn't mean that at all. And it doesn't mean that it won't necessarily take 1 hour. But you need to just know that the lower the time frame, the quicker they come to it. So this here is the 5 minute, okay? Here we're on the 5 minute time frame. Look at this. We had 3 green vectors. 4 hours, came back and recovered the vectors. Okay? Here we had red vectors on the way down, came up, recovered 50% of the candle, which I guess I could talk about that now. They don't always recover the full candle, but in principle, they should recover at least 50% of it. Like, if they recover 50% of it and then they continue to move price down, it's pretty safe to say that they may not necessarily come back up for this right now. Okay? If you come on the 1 minute, look at this here. This is like this dump just happened at the beginning of our stream, right? So this is how I know. Well, okay, I don't know. No one ever knows what's going to happen, but this is how I take my probabilities in taking my positions. Okay, so I know that if a crazy drop like this happens, like pretty fast, okay, this drop is pretty quick. 6 minutes, we came down 1%, right? And man, we all know, like, we had a 5% ETH 1 minute candle like 2 weeks ago, three weeks ago or something, right? So we know, like, this is not uncommon and whatever. But this is a relatively big move. Like, these are big vector candles, right? There's a lot of volume here, whatever. When I can I actually wish I took this long. When I can see that, like, our environmental time frame, depending on the time frame that you're trading, right? But my, like, environmental time frame for when I'm scalping is like the 15 minute. So when I can see on the 15 minute, money flow is increasing, the waves are increasing, right? I come to the 3 minute. This is for sure vectors. Yeah, man. Like, we have vectors down. Here, money flow, I mean, we're going into the red, so you for sure need to be cautious. And the waves are coming down, so you still need to be cautious. But, when you jump into the 1, like, I actually enter on the 1, but I kind of get my execution on the 3, and then environmental on the 15. When we're deep, right, this is kind of a little bit more advanced, and I don't always, like, necessarily recommend to do this. But when we're deep like this, or like this, sorry, on Market Cipher, and I see these red vectors, I will likely pull the trigger based on just the vectors, because I know that they're going to come back to it, and I know, or they're likely to come back to it, and I know that on the 1 minute, they're likely to come back to it a lot quicker than if it was like a 1 hour candle or a 4 hour candle. And let me show you here, for example, on the daily. Look at this. This is crazy, right? Green vector up, a couple of blue vectors, blue stopping volume candle, which we'll talk about in a minute. red vector ripped it down, price comes up. This wick took more than 50% of the candle, so it's safe to assume that it doesn't have to come back for the rest of the candle, at least not now. Price gets ripped down. Okay, look at this. We had a huge pump from 19 whatever. These vectors never came into fruition. When this was happening, for those who know, in the Discord, in Jason's Discord, I was bearish this whole time. And while prices is rising, crazy rising, I'm always like vocal about, I'm like, guys, there's nothing bullish about this pump right now because I'm seeing the vectors, I'm seeing the money. Retail is like, oh, drawing flags and triangles and hexagons and the diamond pattern and whatever. I watch the money. The money's here, okay? Technically speaking, support and resistance works, or TA works, because it's built around the money, right? The game is money. The market makers don't play the game for free, right? They're here to take your money. And by the way, it costs money to move the market, right? Like they're spending money to move the market. So this is important to know as well, okay? If the market maker right here in this point in the chart, let's just say, right, has trapped, let's say they trapped shorts. Okay, so people are shorting. Or no, they would have to trap longs. Okay, they're trapping longs right now. Okay, people that longed up here and they're underwater, right? And they're in profit. Let's say market makers are in profit $200 million at this point, right? And keep in mind, they can see liquidations. So all the people that longed here, their liquidations are down here, let's just say. So if they want to grab the 200 million, they need to come down here, which they can do, right? But if people now start shorting excessively over here, and up here we have, let's just say $500 of liquidation, or yeah, of money, like liquidations. Market makers will drop the 200. They're greedy. They'll be like, okay, I don't want this. There's 500 up here. Let me go grab the 500. So then they'll shift price up. Okay. Again, very, very important to follow the money. I can't stress that enough. So by the principle of the vectors, right, it's safe to assume that at some point, price is going to come back down here. And look at what I said. The longer it takes, or the higher the time frame, we're on the daily here. The higher the time frame, the longer it takes for them to come back to it. It's been 2 months we've been up here. Okay, now go to the weekly. Look at this. Look at that vector. So without doing any technical analysis whatsoever, it's safe to assume that at some point we're going to come here because the money is here, right? At the top, there's money. We left vectors. We left a little bit of vector up here on the weekly, right? Look, I have this indicator here, monthly pink vector candle. Right? This is our monthly chart. Look, we have liquidity here. We have liquidity here. So if somebody's like, oh man, there's no way in hell we're ever coming back to 16,450 ever again. Well, I mean, there's a chance that we don't. I'm not saying we're gonna come for sure. By the principle of the 50%, this candle took this liquidity. So there isn't necessarily a guarantee for us to come back here. But it would be absolutely foolish and irresponsible to not know about this level because the money is here. There's liquidity here. Look up. Oh, whoops. Sorry. Oh my God. Look up. We have pink vector. There's money here. Right? And by the way, I think that's why I've been calling for 32K this whole time. Maybe this liquidity I'm expecting to grab, plus a couple of other confluences that I have. But this is how I kind of have an idea. And really, like the majority of my TA is vectors. Because that's where the money is. That's where the market makers will move the money. So let's look at what's happening now in real time, just to give you guys kind of an idea. Okay.
Gio, I think you can mention about those shades because you never mentioned, and other people might don't know what that means.
These shades here?
Yeah.
Okay, yeah, sure. So the shades are just basically like untapped points in vectors. Okay, so let's look at this 1 hour, right? We had a 1 hour candle down, and then these candles recovered this much of the vector, but they didn't come back up to this point here, right? All this they never came to. So that's why this is like blacked and this is that different color. Again, guys, I apologize. I know it's not the best coloring right now. I just don't know where the setting is, and to be frank, I can't be bothered to go and do it. But I hope you guys can somewhat see it. If you can't, please turn your brightness up. You'll be able to know what I'm talking about. Okay, so let's talk about in real time, right? This is the past day. We had 3 vectors, 3 green vectors, and some stopping volume here, okay? For those who don't know, stopping volume is just these crazy wicks where market makers trap the liquidity, right? Because keep in mind, when price is rising, market makers are shorting. So in this wick, market maker is shorting. And the only reason market maker can short is if retail is longing. Because that's in our nature. Oh my God, the price is moving, I'm going to miss it, right? I know we've all felt that at some point or another. So 3 green vectors while we're topping out, right, on market cipher B. While money's coming down over time, look at this, money flows is significantly coming down. While the momentum is coming down, while we have is this a bear? No, that's not a bear div. This is a oh no, okay, no bear div on the waves this time, but money's coming down. And just like on a couple, like just like this, the first stream, how I very much emphasize the money flow is the most important thing. Follow the money. Same thing here, right? So we have some green vectors while money's coming down. There was absolutely a potential for price to come up and grab this liquidity. Absolutely, right? I'm not saying, oh, you see green vector candles, start shorting. It's not what I'm saying at all. You need to just use it as confluence, and you know that at some point or not, they're very likely to come back to it, especially when you see money coming down over time. The hourly is topped out. Let's see what the 4, I'm pretty sure everything was topped out. Okay, no, not the 4 hour. Maybe the lower time frames. Okay, whatever. 4 hour, money's coming out. While we have this, you might have been able to catch along and you might have gotten lucky. And if you did, you damn well better pay yourself, because at some point, they're going to come back to it. But you need to at least be aware. You need to be aware of it, okay? And then look what happened now. So we had our drop yesterday and we left some liquidity. There's liquidity here, right? If we zoom out, what can I tell you right now that I think might happen? After doing your TA and whatever, here's a swing failure pattern that they could come for, right? They could also swing failure pattern this wick here if they're continuing to move downwards, right? Which, being objective, like they don't need to come down to this. They can, but they don't need to. There isn't enough liquidity here for me to be like, okay, they're coming for sure. But there is liquidity up here, right? So when you're trading ranges, which perhaps on the next stream, I'll show you guys how I trade ranges. Do I have reason to believe that they're going to break this range to the down as opposed to coming up and grabbing this? I mean, they might, right? But is this the time to be super bearish after Bitcoin dropped 5% in a day? Oh my God, everything's collapsing. Well, if you look at the chart, not like everything is not really collapsing. They're just recovering the vector, which has been in your face for the last 5 days, right? So you can't say it's a collapse, we're crashing, the world is ending, recession. Like they're just coming back to exactly what they put in front of your face, right? They left the dessert in front of you and then now they're just coming to get it. That's all it is. So now, right, we'll use it in real time, this logic. You can't short here. I'm going to say irresponsibly, for lack of a better word. But you can't just assume to short here because, oh my God, price is going down. No, man, look. This is plain sight. Plain sight, right there. So if you're going to short, and you're shorting on the hourly time frame, keep in mind, guys, this is dependent on whatever time frame you're on. Okay, but let's say you trade off the hourly time frame. Let's just say you day trade. You maybe get into like 1 or 2 trades a week, or like a swing trade, whatever. If you were gonna short right here, I mean, technically your stop loss should be above these highs, but some people will put their stop loss above this high, right? Well, how can you put your stop loss there if you know the money's there? So it's very likely, I'll tell you this, if they come back up, they're going to take this high, right? Nothing's for sure, but they have no reason to come back up here. There's no vectors in this zone. They have no reason to come back up here if they're not going to come up here. Absolutely no reason. So if you were to short right over here, which I very strongly advocate against, then you need to have your stop loss way up here. And even still, they could take the liquidity, right? Nothing's for sure. You need to have your stop loss up there. Here is a very irresponsible stop loss because, man, there's money there, which means they're going to move price there. This is why a lot of the times you guys and me, retail, is like, man, it felt like they just came and hit my stop to the T. Well, there's money there, man. There's money there. And if they come up, again, by the 50% rule, I don't see why they wouldn't come back up to this point, to 29.3. And if at some point in this week or next week they do, I will call it out because we did this stream now, whatever, and I will post it in my Discord. And be like, look, guys, the stream from the vector, you know what? I'm going to put a vertical line here so I remember where it is. I'll be like, look, the stream from the vector has been recovered. Actually, let's do this. The stream from the vector has been recovered, and I will call it out, right? So this is how you use vectors. This is why they're important, and you use them in tandem with Market Cipher B, which is the best indicator, by the way. And for the YouTube people, again, if you haven't seen the video, go watch the last stream. If you're interested in buying it, I do have an affiliate link. I don't know CryptoFace or whatever, but I'm trying to grow my YouTube, so I would appreciate any support. I'm giving you guys all this information for free, so I do ask if you want to support me, you can do that. The link is in the bio. But anyways, this I mean, not really that short, but is how vectors work. Okay. Does anyone have any questions?
Yeah. There's that long vector, a red one on the left.
This one?
Yeah, this one. Yeah. I think it have a wick. Yeah. There's a small wick down. So the question is, do the wick is actually recover itself even on a small time frame?
I think what you're asking is if I come to like the 15 and this is our wick, this is what you're talking about, yeah?
Yeah. So that if there's a wick, there's no more liquidity below the wick. If we're speaking about the red one, yeah.
So I wouldn't necessarily say there's no more liquidity, right? Market maker doesn't need to grab every single dollar that he can. Excuse me. But, sorry, give me 1 minute. Okay, yeah, I just had a little hiccup there. Okay, yeah, so market maker does not need to come to every little bit to the penny. If you can see, again, I apologize for the shading, but there's different shading here. Like, they didn't come for this. However, was I aware of this liquidity that they could grab? Absolutely, I was, right? So when I longed, I actually, again, I said it in my last stream, but I didn't get to long. Bybit didn't let me, so I FOMO'd like way up here, lower leverage. But let's just say I longed right over here, okay? Most people would put their stop loss under the wick, and in this case, great, you win. But what would happen if they came back for that, and then we got another bull div? And you're like, oh man, what happened? I thought I caught the wick. Like, they're not supposed to come back to it. Well, the money's here. So you can't say they're not supposed to. You need to be aware of it. If they took this liquidity, then I would have been a lot more bullish. And then you could maybe put your stop. Like, depends on how you're trading, right? If you're scalping on the 1 minute, then you can put your stop loss like there or down here or whatever the case, right? But the people that put their stop loss here, it doesn't make sense because there's money there. So why would they not go get their money? In this case, they didn't, but they don't. But you need to be aware of it. That's the point, right? You need to be aware that they can go get it, and you can't be like, "Oh man, it's crashing. What's going on? Is there news? Is there news?" Everybody and their mother says, "Oh my God, what happened? Was there news? Did like China ban Bitcoin again or whatever?" Bro, they're going to the money. Like, there's no such thing as news in the charts. The charts don't care about news because how many times have we had bearish news and the price pumped like a gazillion percent and vice versa, right? Like El Salvador or whatever accepted Bitcoin as payment. That's a huge thing, right? Well, price dumped that day. How does that make sense? So, that's why you need to get news out of your head. Anything that you hear from retail, any of these YouTubers that talk bullshit, excuse my language, like you need to get that out of your head. Follow the money. The only thing that's important is the money, not the news, not the shapes, not the fundamentals, not the Bitcoin halving, none of it. The money is where the money is. The market will move where the money is, period. Any other questions?
Yeah, is there a way to see like how much liquidity is at the top of each candle?
There
And
are,
like you know,
yeah, there are
like those
ways.
traded boxes, that's part of trader's reality, right?
Yeah, yeah.
But it doesn't show you like what you
It
know what I mean, like how much liquidity is actually there.
Yeah, correct. It does not show you how much liquidity is actually there. Um I believe OVA, it has an indicator for that. There are also paid indicators on like like I think like one is like a book map or whatever. I don't know much about that. I don't use it like that. I'm just aware of the levels, but if you dive in and like, really commit to like learning everything when it comes to trading, then it is a good tool to know. Again, I don't know about it, so I can't speak on it, but I would
Yeah.
recommend checking out Traders Reality's YouTube video because he uses it all the time and he goes live almost every day during the week. So check it out, but he will like explain it a lot better than I can.
There
I
is
think extra
a
charts.
liquidation levels V2 indicator, liquidation levels V2, and that shows you where the money is, but I don't
Yeah.
particularly like it because it messes up the chart a lot.
Yeah, I don't know if they if it shows like the amount of money, cuz keep in mind my example, right? They'll let go of 200 million to chase the 500 million. Oh, that is not a 5 at all. The 500 million
With
is
the
up here, so.
vector candles, I mean, you can use the extra charts. The extra chart's gonna show you exact levels. I mean, it's like what you have in a candle inside,
Yeah, so
but it's
vector
very, very advanced.
yeah, I don't use exo charts either. I am probably going to start using it soon, but I don't know much about that either. I can't speak on that. Okay, any other questions before we continue? Okay,
All clear.
cool. I'm actually just gonna run to the bathroom real quick, so give me 2 minutes. Talk amongst yourselves, have a conversation. I'll be back in a couple minutes. And we'll continue.
Yeah, I think you can use extra charts. I mean, this tool is very advanced, and there's a lot of different options where it can just blow your mind. But it's like you have those candles going up and down, and you can zoom in straight to the candles, and you can see shorts and longs, and how much money is flowing into in real time.
Okay, guys, thanks for your patience. Anyone think of any questions before we continue, or are we good?
No, if you could just at the end let us screenshot your settings because I'm trying to get it to look like yours just to clean it up, and it is a bit of a
Sure.
mission because there's so much.
Yeah, man, no worries. We'll do that as well. Anyone else? All right. Let's continue. So, I mentioned that the vectors are relative to the past X candles. Again, I apologize. I don't know. Might be 10, might be 5, might be 15, something like that.
It is 10.
10. Beautiful. Okay.
It says it in the indicator, yeah.
Cool. Now, let's talk stopping volume candles, and let's talk about what like this means, for example, when it's green and whatever. Okay. So we'll start here because it's easier. We'll start here. Forget this pink candle. So if all of these candles are, let's just say 100 transactions each, which obviously it's more than that, but for ease of numbers sake, 100 transactions in each of these candles. In other words, 100 tick volume. Here we have 200, or here actually we have 200. Volume has started to increase. Okay. Keep in mind, it's relative to the past 10 candles. So volume is increasing here. Volume is increasing here. Here, technically in this one, it's slowed down a little bit because blue is 150%, not 200%. Slow down a little bit. Increasing here, increasing here, increasing here. Or not increasing, but remaining stagnant, right? Like volume is still up. And then here we have a very strong candle. That's a red vector. And then it comes, and just, you know, so you can see, it comes in, gets recovered. Literally like you want to talk to the dollar or to the penny, this is $4 off. Okay. So when this candle is forming and you see a vector, and let's just say we drop onto the lower time frames. Right, our lower time frames, and you see money flows thick, you have kind of a cheat sheet entry. You know, maybe you jumped on the 1 minute, or you saw this pink vector and you wanted to catch it. Well, you know that this is a key level right here where this wick is, because that's where the liquidity is. So when you see this red dot forming, let's just say you longed it here, you know to get out around here if you're scalping, because that's where the money is. You don't, it could keep going, but you know at least to take profits there. And if you're looking to short and you see this, like you could, you know, it's fair to say that you're going to short. Money flow is coming down, momentum is coming down. We'd have to go in the 1 minute, but I'm not going to really give details on that. I'm not going to, we don't need to dive that in. You guys get the point, right? If you can see here also on the 3 minute time frame, these green vectors, right? We know that they like to be recovered. So when you're looking at short, and that's like kind of up here because we're pretty topped out on the 3 minute. And again, this is for the scalpers. You know to take some liquid or take some profits here, maybe take some on the 50% mark, maybe some here, some here, some here, like some down here, whatever the case, right? Because it comes in, gets recovered. Look at these vectors came and recovered these ones, right? So that's something to keep in mind. But anyways, back to my point. Sorry, I took a tangent there. When the previous candles are green like this, and then we have a blue vector candle, that is an indication that tick volume has started to slow down. Okay. So it's not necessarily, you know, staying consistent, it's slowing down. And this is better on the higher term time frames because it's like it's less noisy, right? Like it's just less noisy, like clear candles, and it's not so like it doesn't like wick so much. Anyways, so let's look at it in a practical example here, okay? So we have green vector, red vector, whatever, volume starts slowing down. Red vector, After this red vector, we have a blue vector, okay? Remember, red and green is 200%, blue and pink is 150. So after this red vector, we have volume starting to slow down, tick volume starting to slow down. And look at what happens. Price kind of chills around here for a few hours before it continues to drop again, okay? Check this out. We have a red vector candle, so we have 200% tick volume. And then here we have a pink vector. Volume is starting to slow down, right? When we're looking bottomed out here and we can see pink vectors and we know that they're going to probably come back up and take the pink vectors, you know, and we know that volume or tick volume is starting to slow down. That means the market is starting to kind of turn, you know, and it's not always, right? Obviously, you need to assess it with confluence and whatever else, but it's something to note. Volume is slowing down. Here we have a stopping volume green candle, a lot of tick volume. When you see this, this is classic market maker behavior while also giving you a bullish divergence on the 1 hour time frame, which is obviously a strong indication. To enter this trade, if you were to get in somewhere here, whatever, you would obviously need to go on the lower term time frames. But you know, them doing this swing failure pattern is what it's called, which again, maybe next stream we will talk about that. But you can see that it's a vector, which means that here, right, we had volume slow down, and then we had price do nothing for a few hours, 8 hours or so, 10 hours, whatever. And then we had volume starting to pick up. Now, at the time, this was a red vector. When this came down, it started to turn, it turned into a red vector. And then price shot back up for the swing failure pattern. So that means that when this was a red vector, remember what's happening during a red vector. Market makers are buying. Retail is shorting. Well, how does the market maker get paid? He shifts price back out. That's why the term whales are a thing. That's who the market makers are. So when price is dropping, market makers are buying. And then now they need to make money. How are they going to make money? They shift the price up. Now, all the people that shorted down here are absolutely wrecked, right? They have liquidations here, stop losses here, stop losses there, whatever. They get absolutely wrecked. And market maker realizes a return as prices is rising. What happens here? We have some more vectors, right? And again, keep in mind, your vectors are relative to your previous candles. So here, where we have a blue candle, volume is starting to slow down, tick volume, that is. Here, we don't have many vectors, which means here, tick volume is starting to increase, even though they're both blue candles. You need to look at it relative to the previous candles. So here it's slowing down, here it's speeding up. Well, what happens when it speeds up? Market makers are shorting. So they're shorting, right? Okay. And as they're shorting, who's longing? The retail. We are longing. But the problem with us is we don't pay ourselves. We don't take money. We don't take it off the table. We're like, oh man, we caught the bottom. Bitcoin's going to 500K in 2 weeks. Like, no, they're talking about, I think something ridiculous, like 1 million by June or something was said in like back in February or whatever. Well, if you're using the principles of the vectors, how is that possible? How are they going to send price from 20,000 to 1 million by June if they need to realize a return on their money, right? The price only goes up and down to keep interest. They're trying to take your money, which means they need to convince you to long and short, right? This is why consolidations happen. They tell you, retail, they're so stupid. I can't even, like, the logic, it makes no sense. They tell you, oh man, consolidations happen because they're giving time for institutions to buy. And like, I don't even know, man. Like, I don't even know what that means. They're giving time for institutional money to buy it, and they need time to cool off the RSIs. Bro, none of that even makes sense. That makes absolutely no sense whatsoever. They consolidate because when price is dropping, they are not convincing anybody to buy anymore, right? If this candle, I mean, this is not a good example because it was kind of an exaggeration. But let's say here, right? Price is dropping. Again, in order for price to drop, people need to short, okay? People need to short. If and like they're like market makers are buying and this is liquidations. By the way, another thing, ooh, real quick before I'm just going to take a quick tangent. Look at this drop. Look how we had vector recovered, vector recovered, vector recovered, vector recovered. This means that you have a pretty strong move. Okay? This is what you want to see. You don't want to see this. If you see this, it's a fake move. That's why the term fast move, false move is a term. When you see this, it's a fake move. When you see this slow and sustained, it's a real move because they're grabbing the liquidity on the way down. And obviously later they can do this nonsense, but they didn't need to. This could have continued slowly grinding till they got bored of doing so, right? But they moved price in order to peak interest. At this point in the chart, they didn't have enough retail traders committed to put their liquidity up in either direction, right? They didn't have enough. Like, keep in mind, market makers are trying to make money. It's a business. If they don't have retail interested in trading at that point in the chart, they will hold the price there and they will start wicking around. They'll start making you think, oh man, I figured it out. Let me long here, let me short here, whatever. Or that's when they know, and by the way, they're not stupid, obviously. They know that we're drawing our squares and our channels and all that other crap, right? So they know that when they break this point, look at this. This is a perfect example, right? As soon as they break this point, at the time, right, the candles look, or the thing probably looked like this. I don't know, something like that. They probably drew it, and obviously it expands, right? And they extended that. As soon as this on the 1 hour, as soon as this started to break out, oh man, people are longing. Let's go. We're catching Bitcoin back up. We've been coming down for a couple of days. We caught the bottom, or we're good. Look at what happens. People are longing. This turns into a vector candle. Price shifts down. Yes, it comes back up, but point is depending on how much leverage you're using, how much of a move down can you sustain? And yeah, it came back up, but what if you didn't take profits up here? And what if you have your liquidation here and you're like, oh, I'm safe, but then it gets hit here. Or here, oh, I'm safe and it was good here, but then it gets hit here. You know, so that's the way you need to think. Look at this, another perfect example. The people, I mean, the triangles are subjective anyway, but let's just say they did it like this, right? I don't know, whatever. Point is, price comes up. We have green vector candle, right? Getting retail excited to whatever, retail's longing. Another purple stopping volume candle, which means tick volume has started to decrease, okay? And look what happens after it decreases relative to the previous candle. Tick volume has decreased. We get a swing failure pattern here. That's why swing failure patterns are a thing, because it traps the liquidity and it runs down. That's why these shapes don't work, because they're like, man, a breakout's happening. Half the time it's a breakout, half the time it's a fake out. So how is that anything? Like, how is technical analysis in that perspective even real? It doesn't mean anything. You need to follow the money. Anyways, that's why they consolidate. They don't consolidate because they want institution to buy and all the other crap that the YouTubers tell you that have absolutely no idea what they're talking about, that sound absolutely foolish. That's not why they're doing it. They're doing it to pique your interest. They're trapping people long here and then they're ripping it down. They're trapping people short here and then they're ripping it up until they get to a point where they're satisfied with the number of orders that they have here, right? Let's say they have 300 million here.
I come because.
And they have 150 million here. What are they
Oh,
gonna
it's
do?
those guys.
Bro, do you mind, hard moves, do you mind just muting your mic, bro?
Sorry, mate.
No worries. So, you know, in this consolidation, until they have a good number that they're satisfied with, in this case, for example, let's say they have 300 million up here, 150 million here, let's just say another 300 million here, whatever, right? Until they're satisfied, then they'll shift and wreck the range. But that's why the consolidation happens. Don't let anybody tell you otherwise. It's not because of triangles and they have to support this and resistance and I'm drawing a diamond and it needs 70% up, 30% down. That's all crap, man. It's all crap. Follow the money. Any questions? No? Okay, wow. Then once again, I'm going to take your silence as I'm an amazing teacher, so thank you for the compliment.
All right, I'll go ahead and ask you a question.
Yeah.
So they don't all. You might already said it, but they don't always come back for that vector right away, right? They can come back to it like way later down another range
Correct. So,
from another range.
yeah. So the thing with vectors you need to understand is they don't always come back to it and they don't always need to. But again, you need to just be aware of the level, right? So let's just say here, this is a swing failure pattern, right? As you can see, you need to be aware of this level right over here. You need to be aware of that box because the money's there. And then you obviously do your other technical analysis and you know, try to figure out like, okay, well, where's the best place to long? For me personally, when I do TA, I don't really care so much about support and resistance because that's based around money, right? I trade, I follow the money. I don't use weird nerdy geometry shapes, squares, and I don't do that. I pull volume, right? This is volume. This is money. I don't care about triangles and stuff.
Oh, that was my other question.
That,
Can you pull a fixed volume range to tell you which? That was what I was trying to say earlier. If you pull a fixed volume range, will that tell you whether or not they're going to come back for it?
it could definitely be like added confluence for sure. Like let's use this as an example. And I'm doing this live with you guys. I don't even know what this is going to look like. But let's use this as an example, right? So let's just say you pull based on this range and now price is coming back to this old range. Let's just say, well, look here, right? Let's look at the chart. Let's analyze this. This vector has already been recovered, right? This vector has been recovered by this green wick. Okay? So let's just say this wick this wasn't here. Okay? Just because I don't want to find an example. Just pretend this isn't here and they haven't come back to it yet. Well, look at how our value area high, which is where the money is, lines up pretty close to our green vector that was untapped. Like again, forget this wick. Let's just say, like, look how close that is, right? So now you can draw a box like that and say, all right, if I see what I want to see when price comes over here, give or take, I'm going to look for longs, right? If they don't, if you don't see what you want to see here, well, look at this. Again, forget this wick. At our point of control, we have a level right here. We have a red vector right here. That's where the money is. They can come and do that, right? If you don't see what you want to see there, well, look at this box, right? At our value area low, a little bit below, I drew this box. I think there was liquidity there or whatever. I don't know. But let's just say there was like, you know, some other vectors that this didn't get, like take the wicks or whatever. That's how I trade. I use volume because volume is money. I don't use, you know, I don't draw like lines. Like I don't really use it. You can. And you know, it's relatively respected. But it's not like, man, you just got to follow the money. Like look at this, right? If you were to draw this line and retail draws this line, price breaks out, like how is this line technical analysis in any way? It broke out and then it fell. If it's technical analysis by theory, this is supposed to be support now. Right? Like it doesn't make sense. These lines don't make sense. That's what I'm getting at. Any other questions? No, we're good. Okay. I think that's all I got for you guys today. That's really vectors in a nutshell. Now, if you guys have more questions later, obviously message me in the Discord. Guys on YouTube, again, if you haven't joined the Discord, we have a growing community in there and we're pretty active. So come join the group. We chat all the time. And whoever wanted my settings, if you want to pull it up now, we can do that. Next time, I will maybe talk about the vectors in relative to our EMAs, because that's important. EMAs are very important, and where your vectors present themselves in the chart is important. Okay, so it's important where they present themselves. So maybe we'll chat about that next time. I'll do a poll just like I did for this stream and see what you guys want to see. But for now, let's do the settings. So I think who was it? Who was asking me for the settings?
Sweet, I'm going to screenshot that.
Okay, cool. I mean, I didn't really change too much. I changed the names of the Brinks box and all that. By the way, Brinks box is a very important thing, which I can also do next time if you guys are interested in it. So I just changed the name. Like this said New York, but I just made it NY just so it's a little bit cleaner. I removed the tables on the top because you don't really need that. I removed the lines because the lines can get a little bit messy, right? Like all that extra stuff can get messy. Yeah, so I kind of just keep the EMAs and obviously the vector candles. But we can go over like Tino's indicator in depth because there's a lot to unpack here. We can do the Brinks box, we can do the sessions, we can do the average daily range, we can do the psychological levels. So I have quite a bit that I can go through with you guys in regards to the indicator, and perhaps we'll do that next time. Do you guys feel confident? Can I get some feedback? I want to know that you guys understand what I'm saying. It also helps me understand like whoever may view this down the line on YouTube, that you guys understand.
Yeah, I mean, I found that really useful going into it. I didn't know what vectors were at all. Now I definitely do. And there's like little nuggets, like about how you use the vector to identify the right place or the most logical place for a stop loss. Like I wouldn't have thought of that. Setting it just outside that little liquidation grab area.
Yeah.
Yeah. It's the devil's in the detail. You might not realize that you're dropping bombs when you say things like that, but it's really useful.
Yeah, man, absolutely. And I mean what I say. Like that's like, and I'm sure, man. I don't know you guys like that, but I'm sure we've all experienced having a stop loss like right here because you caught this short, and then look how they got stopped out. Look at this. Right? But there's liquidity up here. So how could you put your stop loss here? You see what I'm saying? So yeah, it is useful information. I'm glad that helped you out. Anybody else have any feedback for me?
I've got sorry, I'll let you go.
Long story short, I had a stream with you before and you explained me this concept very well, and I think it's good to sleep with it. I leave it with a couple of days before you're gonna start realizing what is going on and how the market actually works from that what we experienced in the past. Yeah, that's all.
Yeah, absolutely.
Just keep Trader's Reality on and watch how it reacts to price action. You can learn from there.
Yeah,
Learn more from there.
for sure. And you could say like, look, I'm gonna come to a random point, okay? So like obviously I didn't go through this. I don't know where we are in the chart, whatever. Actually, that's too far back. Let me see if I can find a good example. I mean, this is kind of the best example. It's also the most recent. Like, look how they recover these more often than not. Like, it's likely that they're going to do it. And it's to the dollar, bro. Like, look at this. Like, this is, it's almost to the T. So on this whole move down on the 4 hour, look at this. Watch. Let me explain to you right now in real time my logic. And you're not always going to win. You're not always going to catch these trades, but let me explain it to you, okay? This is what's going on. We had a green vector. We had a red vector rip it down. Okay, so they realized their return and then they shift the price back up. I personally was not expecting this move down because as this move started to rise again, these were not vectors on the 4 hour at least. Okay, they were not vectors. And keep in mind, remember what I told you guys. If price is doing this, where's my? If price goes up like this, that's a little bit too fast. If price is going up like this, that's good, right? If they're recovering their vectors on the way up, that's a good sign. This is a good sign. They're recovering it, right? They had a vector, this wick covered 50% of the vector at least, we're good. We take that out. This huge candle got recovered, right? This stopping volume candle got recovered. Here, got recovered. This green got recovered. So I actually thought price was going to continue up. I'm not even going to lie. I did end up shorting, but I shorted from like down here. But I thought it was going to continue to come up because in my mind, there was liquidity up here. And I'm like, okay, well, if they're recovering the vectors on the way up, then what reason do they have to bring price back down? They're already recovering the liquidity as they go. So I was expecting price to keep moving up, right? Alongside being above the EMAs and whatever, which we'll talk about maybe next time. But I did not think that the price was going to drop. So let's do this in real time now. Okay, let's start on the 4 hour. I don't know how you guys trade, but let's start on the 4 hour, right? 4 hour, we have objectively, we have money flow increasing. Although we have this, relatively large drop, we have money flow increasing. This can very easily, and I'm not saying this is going to happen, and definitely don't long based on what I'm saying, but this could clip here, come up, money flow continues to come up, and then, we have another move to what I expect 32K. That could happen. And I would even argue that it's more probable than not to happen for two reasons. Number one, the money on Market Cipher B, the best indicator out there. If you guys don't have it, check out the link in my description. The money is heading up. Objectively, it's heading up. And this drop was not fueled by bear divs. I thought they were going to take this wick. If they took this wick, I would be a lot more bearish because there was liquidity, right? There's a lot of stop losses, but they didn't. And it would have given us a big bear div. But we don't have a bear div here. So that is making me a little bit more bullish. And second of all, if we're following the money, this came down and recovered this wick, and it's leaving vectors behind. Look at it, right? Let's zoom in. This is a big imbalance. Right here, look at this. That's money. Guys, that's money. Here, there's money. Right? If they're going to come up right away, maybe, maybe not. Remember, on the higher the time frame, the longer it takes. So this is the 4 hour. Do I expect price to literally... Oh man, these indicators are killing me. Or do I expect price to just do that? Probably not, right? But do I expect maybe like this? Maybe. Could happen, right? It could just come up, but I don't think so. But, because it's leaving the clues are behind, price is dropping. Look at this. If you use the principle of the pink after the red, or here we have higher tick volume. We have 200%. 200. Now price is starting to slow down. Well, what happens when we have red vectors or green vectors followed by purple? It starts to slow down. We went sideways for a little bit. Look at here. I mean, this is not the best example, but we had a lot of vectors. And then, actually, that's not a good example. But you guys, whatever, you get the point, right? Like here, we had a green like red, green, pink, price started to slow down. What's to say that price is not slowing down here, right? We have green, like 200. Now it's 150. Now it's 150. If this candle is not a vector, then we're back at normal tick volume, which is also in confluence with this vector that we just recovered, right? So it's safe to and the 4 hours is pretty bottomed out with money flow coming up. So it's possible, it's safe to assume that potentially we could just start forming a new range here. We could keep dropping. I'm not saying we're not. Look at this range over here, right? So we could just come down a little bit more, hang around here, spike up, freak everybody out, spike down, freak everybody up, and then come back up. And then this chart could look something like this, where we have a nice 4 hour bullish divergence. Money flow could come down a little bit and then come up, right? So similar to last stream, how, you got to pay attention to whatever time frame that you're on, and you need to be able to expect where price can go. So let's use this as an example as well, right? On the 4 hour, if you see this green vector followed by this red vector, and you jump down on the lower term time frames, because like I said, I did not even expect this to happen. But let's just say you caught the top, and then you see this 4 hour red dot. Okay. And on the 4 hour, when you're on this chart, you come here, you see this, you're like, okay, there's a vector here. At the time, even 50% of it was not recovered. So what you can do is you can draw a box from 50% to here and say that I'm expecting, like, our price has the potential to come to this point. And look at exactly where we are right now. It has the potential to come here. If you were to do this on the 2 hour, same story. It has the potential to come down here. So when you see a red dot on a higher term time frame and you're long and you're like, man, I think it's going to bounce from here, jump to that time frame. Where are the vectors? Where can price come to? If you're in a long from up here and you see a 2 hour red dot and you're not scalping, and sometimes we just open trades and we just like blindly ignore it for a couple of days and hope it goes well. Like, I mean, I do sometimes. Like, I take profits and then I just chill. I got stopped out. But anyway, you need to come to the time frame relative to the indication, right? Market cipher B here for on the 2 hour, and you need to mark out this box, right? You need to know that it could come from here to here. It could. It doesn't always, but it could. Which means if you're long from up here and you're swing trading, you better not have your stop loss like under this wick, for example, under this wick right here, because the money is here. And if you guys go back on the chart, you'll see more often than not, they'll come for it. Right?
Hey, sorry.
Sorry, one last thing, and then I'll let you speak. Look at this, right? Here we had a bear div on the 4 hour. Okay, pretty strong indication on the 4 hour. If you come to the 4 hour, you see the bear div. It might not happen right away. It might keep going up. That's whatever. But you need to be aware of these levels. And look at what happened. Price came to these levels based on the 4 hour bear div. That's how you need to use your extra confluence. Sorry, bro. Continue. What were you gonna ask?
I'm on Trader's Reality on my laptop. I don't see. All right, I'm on the BNB chart, 15 minutes. Still trading that, but I don't see those light boxes that you were. Those boxes, yeah.
Oh, these? Yeah. Okay, so come to your indicator. Which one did you get? Did you go to here and write Trader's Reality, or did you go to his website?
Oh, I just found it on TradingView.
Okay, so come here. Like your menu looks the same as mine.
Hold on, let me.
Yeah.
Yeah, I'm watching you on my phone while I'm doing the computer.
Sure.
All right, go to setting.
And yours looks like this, yeah? Like yours is TR main?
No. Mine just says Trader's Reality.
Okay, so
but it looks the same settings.
okay, because he made a newer indicator which like included this. His old one had it separate. Listen, we'll on our own later after the stream, I'll help you with it.
That's fine. Cool.
Yeah, that's fine.
All right. Thanks.
Yeah, no.
Okay.
Okay, guys. So I hope you guys can understand, the thought process. Look at the 4 hour on BNB, for example, right? We have a red dot. Like, you got to know that price can come down to here. So if you're longing from here, you're not putting your stop loss. Like, it has to be lower. And I mean, really, like, I don't know where I would put my stop loss. I don't really swing trade like that. But look at all this liquidity, man. Look at all that. Like, that's crazy. So that's how you use vectors. That's why they're important. Don't listen to anybody when it comes to the shapes and the squares and the hexagons and all the nerdy shapes. Follow the money. The business is run by money. Follow the money. When we talk about Tino's indicator more, when it comes to like the EMAs and stuff, I will show you when and how you know that price will continue when you have vectors. Cool.
And what were the pink ones?
So the pink and the blue were 150%, like of the average tick volume, and the green and the reds are 200% of the average tick volume. So if average is 100, then blue and pink is 150, and red and green is 200. Double the amount. And the reason that's important is because only market makers can trigger that many transactions in that small period of time. So when you see vectors, market makers are doing what market makers do. Are we all good?
All good, bro.
Yeah, all good.
Thanks, mate.
Okay. Anybody else have any feedback on my teaching style or the stream or whatever?
The only thing I'd say that you could look to improve slightly is when you're like zipping around to show areas of the chart, when you find it, just like leave it, because if you keep moving it a little bit, it gets trickier to see what you're trying to explain.
Okay. Noted. Thank you.
Yeah. Cheers.
Okay, guys. I think that's it for today. That was a lot of information to soak in for sure. I 100% recommend going back and watching it on YouTube. I'll have it up later tonight or tomorrow, especially the part where I'm talking about like market makers longing when the price is dropping while closing their shorts at the same time and whatever. It can be a lot of information to soak in. As always, I'm gonna now start calling stuff out that I see and posting it in the Discord. So for the people on YouTube, if you're not in the Discord, once again, check the description. The link is there. Come join our community. Come join our conversation, and let's make some money. And yeah, so similar to last week, how I started posting the cheat sheet entries and whatever else, I will start saying, oh, look, vector up ahead, whatever. Obviously, that doesn't mean price is necessarily going to go there 100%, but it is something to keep note of. And I encourage you guys also to start calling stuff out. You know, ask questions. I'm here to help. I'm not the best trader in the world, but together we can all take this information and learn from it and, get solid call outs.
Thanks, man. Really useful.
No worries.
Thank you very much as well.
No worries. Thank you for your time, guys. I really appreciate it. I'm gonna end the stream here. And we'll catch you guys next time.
See ya.
All right, guys. Stream is over. YouTube people, I'm only speaking to you now. Please, if you guys got any value from my video and you made it this far, first of all, I absolutely appreciate the watch time, and I appreciate you coming this far. If I've provided you any value, please, I ask you to like the stream, give me a sub, watch it back a couple times, help my watch time. I'm trying to give away all this information for free as much as I can and do as much as I can for the community while building my own community. So once again, the description, my Discord is there. I appreciate you guys watching till the end. I hope you got value, and we'll see you next time. Take care.